All right, shares of Starbucks rising higher today after a report that activist investor Starboard Value has taken a stake in the company. That's according to the Wall Street Journal. Starboard plans to take steps to boost Starbucks stock price. It joins Elliott Investment Management in the turnaround efforts. For more on the added urgency that brings Starbucks, let's welcome in Gregory Francfort, Guggenheim Partners Senior Analyst. And Gregory, I just want to sort of get your broad takeaways here. It seems like we don't have a good sense of exactly what these activists want Starbucks to do differently and how that's going to impact what the company is doing. I'm curious just what you make of the activist positions we've been seeing in the company and what it means for investors that own Starbucks shares.
Sure. I think anytime you have a company that is this big, this global, it's down 20% year to date. The earnings haven't come down materially. It's trading at 20 times earnings. You're going to get interest from a lot of global investors. I think Starbucks has struggled the last year or two for a variety of reasons, some of which can be blamed on the current CEO. But I think a lot of it is structural, a lot of it is industry-wide. And so we're going to see what these investors have to say, but we have a few thoughts, and I'm happy to go through them.
Let's go through them, Greg, because, as we know, Jeff Smith of Starboard famously told Olive Garden to salt that pasta water more. And we don't know, to your point, exactly what we are going to hear from him on this front. But if he's going to get that granular, what do you think he should be targeting?
I actually started salting my pasta at home after he did that. That was several years ago. But I think one of the things that they need to do, they've been accelerating unit growth in the U.S. I mean, if you go back 18, 24 months, they had a 1% unit growth in the U.S. This is a company with almost 17,000 U.S. stores. They are adding 600, 700 year over year right now, which they probably shouldn't be. I don't know that it makes sense to necessarily add that many new units. This is at a time when Scooter's Coffee has been, last year grew 35% unit growth. You have Dutch Bros, which is adding a ton of stores. You have Seven Brew, which has kind of come out of nowhere. They went from 40 units to over 200 in a year. So you have a lot of capacity coming into this space. And if you look the last 2 quarters at Starbucks' new stores, they're only doing 1.5 million, which is down pretty materially from where they were 9, 12 months ago. We think they need to turn that off, turn off the growth valve.
And Greg, what do you make about the efforts then from a product standpoint, right? They're launching this new energy drink now. That's been sort of cited as a reason that maybe people aren't going to Starbucks as much. Maybe they're going and getting one of those canned energy drinks instead. They're trying to get into that business. Does that make sense to reinvigorate growth, or is that not really the right choice at this point?
Yeah, I look at a company like Celsius, which has doubled its sales year over year, but it's only $600 million of incremental sales. So I'm not sure it's making a dent on a $30 billion in sales brand in Starbucks. I think they've actually done a decent job with the products. They've launched spicy lemonades, bubble teas, energy drinks, and I've tried them all. I think they're pretty solid. I don't know if they've done a very good job of marketing that, and that's one of the things that they've kind of come out and pretty publicly acknowledged is that if you're a core customer that's loyal to the brand, you're still engaging with Starbucks. But if you are a customer that was coming once a year or occasionally, they are losing the message with that guest. And I think they've not done a great job of traditional media, and they've not done a great job of kind of making their products aware to customers who aren't in their ecosystem already.
I also always wonder about throughput when it comes to Starbucks, right? Which is something they're really focused on. For folks who don't know, that's just basically like how quickly they get you in, get you what you need, and get you out of the store. I can speak anecdotally that my local Starbucks, if I want to get a coffee before I get on the train in the morning and I do not order that coffee in advance, and I get a drip coffee, Greg, I'm not getting anything fancy, I will not get that coffee unless I order it like a half hour in advance. Sorry, am I going on a little mini rant here? I'm just saying, I can't be the only one who's experiencing this kind of thing.
No, you're spot on. I mean, I'm pretty tech savvy, but trying to get my mother on the McDonald's app took me about an hour. And so there are customers out there who are a little bit slower to engage with technology. And if you're not necessarily marketing to those customers or kind of fitting in those customers into your model, you're going to have a challenge. I think, look, they've accelerated their CapEx from about $1.5 billion a few years ago to $3 billion, which is almost half of cash flow from operations. I think they need to redeploy some of that's going to new stores back into the experience, back into the flow of the restaurant to address exactly what you're talking about.
Greg, one more quick one before we wrap here. This is just, it's a name everyone knows, right? And for the stock to fall this much, when people know people that go into these stores daily, they're constantly buying the coffee. To some people, it just doesn't make sense, and they're wondering why they shouldn't be getting into a name like Starbucks that has drawn down the way it has. What is one thing that would move you off the sidelines? You have a neutral rating on the stock. What do you think makes it a buy? What are you looking for that would make it more attractive?
I think some of those steps, I think if they were to rationalize the growth a bit, I would have to kind of reevaluate that thought process. And you're seeing that a bit in the space. You're seeing unit growth come down among a bunch of these smaller competitors that are growing quickly. And I think also if they come out there and kind of give a really clear case for exactly what they're doing for these non-core customers, that's going to really move the needle. I don't know that they've done that well yet, but time will tell.
Yeah, I hope Jeff Smith and Jesse Cohn are watching right now and getting some ideas. Greg, thank you so much. Appreciate it.
Thank you.